Hi, I am Nayo Carter-Gray, owner and founder, First Step Accounting, where we make accounting a little less taxing for small business owners just like you. I'm guessing you can say you can count on me. I'm partnering with QuickBooks on this video series to help you run and grow your business. And today we're going to cover a real hot topic, small business tax deductions. The IRS plans on increasing small business audits by 50%. And I know that running a small business can be costly and come with a bunch of expenses that tend to add up over time. So to ensure you are writing off all the deductions you are eligible for, today we're going to talk about a bunch of different tax deductions that may be available to you. But before we get into the content, I want to make sure you're tapping that like button and subscribing to the QuickBooks channel for more video content just like this. And if you're a reader, make sure to check the link below for an article on this topic. So, what is a small business tax deduction? Well, a small business tax deduction is an IRS qualifying deduction that helps reduce your taxable income for state and federal tax purposes, because the goal here is for you to pay less in taxes. An important note that you really want to pay attention to here is that in order for an expense to be tax deductible, it must be ordinary and necessary in order for you to run and manage your business. So, how do business tax deductions work? In order to confidently take advantage of business tax deductions, you want to make sure you have meticulously kept records. Storing copies of receipts and bank statements will make sure you have acceptable documentation on hand in case you receive one of those pesky love notes from the IRS. Also, it's a good idea to maintain a separate bank account exclusively for your business, so it makes it easier for you to track your business income and expenses. Want to learn how to categorize your transactions for better bookkeeping? There's a tutorial on how to use QuickBooks to do just that. You want to create a list of all the tax deductions you plan on taking. If you're a single member LLC or a sole proprietorship, you will be filling out a Schedule C. Multi-member LLCs, partnerships, and corporations have different tax forms, so make sure you're talking with an accounting or tax professional to ensure you're filling out the correct form. Let's do a quick rundown of some small business deductions your business may be eligible for. Business meals. Meals with employees and clients could be tax deductible if there's a business purpose tied to these meals. No, it doesn't include your morning cup of coffee or your daily lunch. However, if you're talking business strategy with your office manager or trying to woo a new client, you can totally write off the cost of this expense. Now, usually you would get 50% tax deduction for meals, but in 2021, you do get to write 100% of this cost off. Business insurance. Business insurance is tax deductible, especially if it's required by state law or industry regulations. Business interest. Loans taken out for business purposes, including mortgages or lines of credit, may qualify as tax deductible. But be mindful, only the interest expense portion of your monthly payment may be eligible for that tax deduction. Advertising and marketing. Small business advertising and marketing expenses qualify as fully deductible as long as those costs are ordinary, necessary, and reasonable. So your local ice cream shop may not need to add a billboard in Greece. Business use of car. Costs associated with operating a vehicle are tax deductible if that vehicle is used for business purposes. You will need to track 3 mileage numbers. That would be your business miles, your commuting miles, which are those miles to and from your 9-to-5 workplace, and the total miles driven for the year. Now you can maximize this deduction even further by either taking the standard or the actual mileage rate. If you use the actual mileage rate, it will also allow you to write off some additional costs like insurance, gasoline, repairs, and maintenance. Either way, you'll need to track your mileage. The QuickBooks mobile app makes it very easy to do so. It uses your phone's location to detect when you're driving. Education. Small businesses that provide education to their workforce may be able to deduct the associated costs. This includes continuing education as well as advanced professional licenses. And owners, this also includes you. You may be eligible to deduct some of your continuing education costs, but make sure you talk to a trusted tax professional to verify. Depreciation. This valuable non-cash tax write-off allows owners to deduct the cost of assets over time while factoring in its normal age, wear, and tear. Legal fees. Legal fees are one of the professional service fees that qualify as tax deductible as long as they're business related. Moving expenses. Expenses incurred from moving your business to a new state or city may be eligible for tax deduction. Costs include transporting supplies, inventory, or business equipment. Rent. Business owners that lease buildings, office space, warehouse space, or other business equipment may be eligible to deduct rent expense. Salaries and benefits. Small business owners with employees can write off their workers' salaries and benefits on their business taxes. This includes regular pay, vacation pay, commissions, bonuses. It also includes benefits such as health insurance and retirement plan contributions. Phone and internet expenses. Phone and internet costs can be written off as long as these items are essential to business operations. And as a side note, if the phone line is in your home, it must be a dedicated second line in order to qualify. Travel expenses. In order for a trip to qualify as business travel, it must be to a destination outside of the traveler's residence state. Also, the business purpose of the trip should be planned in advance. And lastly, because this is a tricky tax topic, I do encourage you to speak to your trusted tax professional to ensure your trip actually qualifies. Home office. Business owners who have a dedicated space for business in their homes may be eligible to write off a portion of their normal household expenses. In order to be eligible, you will need the total square footage of the space you're using exclusively for business, as well as the total square footage of the entire home. Now, just like with the auto expense, you may be able to maximize this deduction by either using the actual or the standard expense methods. Either way, you'll need the total square footage of the space you're using for business, as well as the total square footage for the entire home. Office supplies and expenses. Now, office supplies and expenses that are necessary to run and maintain your business are totally tax deductible. Who doesn't love a good Post-it note? Startup expenses. Small business owners that launch and start a new business venture in the latest tax year may be eligible to deduct up to $5,000 in startup costs. These costs can include business formation as well as the purchase price of an existing business. If the cost is higher, then you may have to amortize over 15 years. This is another one of those tricky tax topics, so I do recommend that you talk to your trusted tax professional to get more advice. Now, I know this was a lot to cover in a short amount of time. Just remember, there is an article linked in the description that you can refer back to for more details, as well as some additional tax deductions. Tax time does not have to be tough if you've kept good records. QuickBooks does do all the double entry accounting for you, making sure your books are balanced and every dollar accounted for come tax time. Don't you just love deductions? Well, don't write this video off. Make sure you hit that like button and subscribe to the QuickBooks channel to see more video content just like this. See you at tax time.